How we doing, guys? In today's video, we're going to be talking about the importance of knowing which type of trade you're going to take before you take it. And more specifically, we're going to be talking about scalping versus trend trading. Now, we have a chart here just for example. I got the ES here. This is what I mainly trade, but you can apply this to basically whatever you trade. You can trade equities, Forex, small caps, whatever you're trading. This applies to anything and everything. So first of all, let's understand what we're talking about when we're saying scalping. So a scalp for me is essentially a very quick move. So we can look at this chart here, for example. We saw a very quick volatile move to the downside in this candle. And this is what I would call a great scalping opportunity. You know, this was all in a matter of 5 minutes. This is a 5-minute candle. And you could have capitalized on some very nice profits in a very short amount of time here. Now, when we look at a trend trader is more concerned about the bigger picture and more of the overall move that the stock is going to make on the day or in several hours, over the course of several hours, rather than that quick 5, 10, 15-minute move. So in this case, you know, we had a nice short scalp here. We had a nice long scalp here to the upside. But if you overheld your position here, let's say you were long and you were looking for a trend trade here rather than a nice scalp, what would happen? You obviously got destroyed on this day, right? So same thing on the short side. Let's say you were short over here. Let's say we were short over here in this candle, and you're looking for this kind of move, right? This kind of big unwind. But what happens is it reverses on you here and you get stopped out because you thought it was a trend trade or you were looking for a trend trade when you should have, in reality, been looking for a scalp. So in this video, I wanted to talk about how to differentiate the two and how to kind of know what's a trend trade and what's a scalp. And what you're going to learn here is it's pretty much impossible to predict what's going to be a scalp and what's going to be a trend trade. As you can see here, we had a monstrous move to the downside today, and I'm sure this caught a lot of longs off guard because nobody really expected this move when we were pushing and looking bullish here. This was on Friday. So we're looking bullish here and everyone's thinking breakout and going to new highs, when in reality it was just a big bull trap and the shorts just completely dominated and sold right into the close here. And we got a, over 100-point drop into the close there. So if we're looking to participate in a trade, how do we know whether we should be holding for a move like this or whether we should be scalping for a quick move like this over here? Now, the golden rule of thumb is, as I said earlier, you can't really predict when you're going to get these kind of outlier moves in these big days. And you can't really predict when it's just going to be a scalp day. All you can do is react accordingly to the price action in the moment. As traders, as active day traders, our biggest edge is price action. It's understanding the price action of the candlesticks, the tape, and understanding how price is moving in the moment. That is our key edge. Because, looking at the, overall chart, yes, it gives you some context of what could happen, but what you want to be looking at is what is actually happening in the moment. So let's just say, for example, let's say I wanted to take this short for a scalp. So we got in here for a scalp trade. Now, let's say I bought a few puts, let's say I bought a few contracts, put contracts, and we're in a nice short position here. And we're up pretty nicely here, so we lock in some profits because we're thinking this is a scalp. Now, what I can do here is I don't know if it's going to be a scalp or if this thing's going to continue unwinding here, but what I do know is I can lock in some of my profits or the bulk of my profits, expecting it to be a scalp, and then let a few contracts or a few shares, depending on what you're trading, let a few contracts or a few shares ride in case we get that big follow-through move. And you can use a trailing stop for those remainder of the shares. And what this will do is essentially you'll be able to capture most, if not all, big moves in the future without sacrificing your profits, without giving back your profits. So if I was to go for let's say I was to go for a big move here, I didn't cover any of my shares or my contracts, I was just holding and I wanted this kind of move right here, I wanted it over here. What would happen? I would be in a big winning position, unrealized. I'd be up very nicely here. But because I'm going for that bigger move and I haven't locked any of my contracts or shares in, this is what happens. I get stopped out more often than not. And, I've experimented with this myself. I've been trying, both methods. And what I found is kind of a happy medium in the middle. So I don't like to scalp or trend trade. I like to scalp and trend trade. So combining the two. And this is what I find is the best approach for myself. And I believe it's the best approach for most traders. Now, depending on your style, this might not work for you, but I think it's a pretty good approach for most traders. Give it a try and see how it works for you. So basically what I do is every single day in the market, I come in with a scalping mentality. So I'm looking for quick volatile moves, and I capture those quick volatile moves by paying myself at least 50, 60, 70% of my position, locking it in, and then letting a few, letting a few ride just in case we get that kind of move. Now on Friday, I did trade this. I took it to the long and the short side, and I left a lot of money on the table. And this is kind of what led me on to create this video, because I feel a lot of traders struggle with the same issue of, how long do I hold on to my position? Do I treat it as a scalp? Do I take it as a trend trade? Do I hold on? And I think it's really important to discuss, what the best method really is. So that's where I kind of stumbled upon this middle ground approach. So on Friday, I traded this, as I said, on the long side. So I took a scalp here. I got in long on this nice bullish candle, and I rode it all the way up to just over the high of the day here. I locked in my profits. So I locked in along the way, just as I would on a scalp, locked it all in there. And then I wanted to get out right in front of this resistance line, which I had drawn. So we had some supply up here, and I locked it in there, and then I was done with that long trade. Now I was looking for a short trade on the next one because I was well aware that we were running into this supply zone. And not only that, the price action was confirming to me that we are indeed struggling with this level, this 4018 level, this 4017, 4018 area. And I'll zoom out of the chart in a bit to show you guys why that was a key level. But for now, let's focus on the trade I took. So I got in roughly around 4012, so 4012. I had an average around here. Really good average, obviously, in hindsight, right? But in my mind, I was only thinking of this as a scalp. So what did I do? I locked in my profits at support here around 4,000. As soon as we came down to test 4,000 here, I got out of my full position. I didn't leave any contracts riding. I just wanted to lock it in. It was a nice quick profit. It was a decent scalp, but as you can see, look how much money I left on the table, right? So I thought to myself, how do I avoid this in the future? How do I differentiate what's a scalp and what's a trend trade? And, as I discussed earlier, you really can't differentiate them. So the best method I found is to try to, treat every single trade as a scalp initially, but let a few contracts ride, because a scalp can always turn into a trend trade. You never want to let a trend trade turn into a scalp, because then you have an initial thesis of a trend trade. You say you want to look for a bigger move. You don't want to be treating that as a scalp, because you already have a plan for this to, you have the context and you have your predetermined plan for this to make a really big move and really trend all day. What you can do is turn scalps into trend trades. So in this case, instead of locking in on all my contracts here around 44,000, what I could have done is locked in, let's say 70% or 80%. And that way I ensure I locked in the profits. I locked in a good chunk of my profits. And if I just let that 20% ride until it gives me a reason to stop out, you just set your trailing stop. You can use, I like to use the EMAs. So I like to use the 8 or the 9 EMA as a trail. So that way you can have a guide. It's kind of like a guide to see where the trend is. And in this case, it was pretty obvious, right? The bears were definitely in control. So what I could have done is let that 20% or 10% ride, and that probably would have paid me more than those initial contracts did, the bulk of my contracts for this small scalp. And that's the beauty of letting just a few shares or a few contracts ride. They can pretty much make up for your previous trade and double or triple it. So the previous shares you've locked in. So even if you had a large position and you locked in the bulk of it here for a quick scalp, just holding on to a small portion of that position and letting it ride like this, these trades can pay you out much more than you think. So it doesn't hurt to let just a few contracts or a few shares ride, and that way you can take full advantage of the moves. Now, obviously, you're not going to get these moves all the time, which is why you should not be going for these big moves every single day. But this is why I kind of came up with this method of, kind of a hybrid approach of scalping and trend trading. So that way I'm always usually scalping, so I'm always making sure I'm locking my profits in, because more often than not, when I'm going for trend trades, I get stopped out too often because I'm looking for these kind of moves. And if you're looking for these moves every single day, holding on to your full position, you're not locking in, you're not scaling out of your position, you're going to get stopped out way too often. And that really affects your trading psychology, and it'll start to make you lose confidence in your ability and your system and your process. So this is just what I found. Try it out in your trading, see if it helps, see if it works for you. I think it's a great approach. I think it'll make a big difference in your trading. It sure did make a big difference for me because I was in constant losing trades when I had such big unrealized wins, but they turned on me, So, these kind of moves here can really trick you and fake you out. When you're going for a trend trade, you're in a short position here, and then, they catch a bid here and they rally it. They catch a bid at this demand level here. And, that trend trade you were going for, in hindsight, you thought to yourself, oh man, I should have scalped that instead of holding it, right? So this is why this approach is very powerful and can really shift your trading. Just treat those trades like a scalp, locks scale along the way, and then hold on to a few for that bigger move if it wants to give it to you. So, we can never predict the market. These moves are not predictable. You can have a plan, you can have a thesis, you can have the context, looking at the daily chart here. We can zoom out here to show you guys why these levels were important. We had this huge level over here, as you can see on the chart. We ran right into supply. We had this big downside move. And if you guys have watched my supply and demand video, you would understand that this these bounces here are going to be very heavy supply. Why? Because there's big institutional sellers waiting for this price to retest to fill their sell orders after we had this big downside move. We had these big move here and then this big drop here. We're coming back to retest some key levels. You can expect there to be very heavy sellers around these levels. Now, is it going to work like this all the time? No, probably not. But this just happened to be a very, very reactive supply area. And as you can see, the reaction was very strong. There may have been a catalyst as well involved. I'm not too sure. But when the negative catalyst is involved, it definitely helps fuel the market lower or higher if it's a positive catalyst. So hopefully this video helped you guys. If you found it helpful, please leave a like and shows me you guys found it useful, and I'll keep uploading some more in the future. All right, guys, enjoy the long weekend. Cheers.